I'm poor, I don't have the money, they don't see the importance of it. Can you say something to those persons, especially persons who have children? Because I always say to people, oh, if you have children, even if it's one child, and don't have life insurance, because if something should happen to you today, you will leave that child with nothing. So I never understand and still can't understand how persons can be out there, especially parents, and you don't have life insurance. Even if it's the most basic plan where you pay, I think I remember seeing the document that you can get life insurance for as cheap as a little bit over $1,000 per month. Right. And I'm like, even if that is what you can afford, take it out. So just in case anything happens to you, and even if it's just $1 million, at least your family can bury you out of it. What is life insurance, and what does life insurance have to do with home ownership? Hi, I am Sharika, and welcome to Just Sharika. On today's episode, we have a very special guest, Mr. Shamar Clarke, financial advisor at the Sagicor Life, who will answer these questions and more. But before we get into that discussion, I will ask Mr. Clarke to tell us a little about himself and his role at the Sagicor.
All right, so I'm Shamar Clarke, financial advisor at Sagicor. The Sagicor, as you rightfully said. What I do at Sagicor is really I help persons to gain control over their finances, to help them to get to a goal that they want to get to, and in the event of them leaving here prematurely, they're able to secure certain goals that they want for their families to ensure that they guarantee the life that they would have recommended or started for their family now, they're able to continue that, even if they've left this earth. So my aim is really just to really and truly just give persons control, help persons to give them control over their money via insurance products, investment products, pension products.
Okay, that sounds interesting, because you're helping persons basically to put their lives together.
Correct.
All right, so I have a list of questions that I will be asking. So from time to time, you may see me looking down. I'm just looking at my list to ensure that we cover all the questions on the list. All right, my first question to you, Mr. Clarke. What is life insurance?
All right, life insurance is a dynamic product or a dynamic service. It is really a contract between an insurer and a policy owner. So the policy guarantees that the insurer will pay out a certain sum or an agreed sum in the event of the passing of the policy owner. It also guarantees that there's a certain amount that is going to be paid out down the line in the event that the policy owner lives long enough and is able to cash in on that policy. So long and short, it is really a contract between an insurer and the policy owner.
Okay, you made mention that it is a contract, so this is a legal binding document.
Legally binding document, and that is why, as advisors, we champion the cause of persons being very honest when they're filling out the documentation, because being dishonest in filling out the application is considered a breach. You wouldn't want to lie on your application now, and then it causes problems when the money is really and truly needed. Okay,
so have you ever experienced persons not putting or not being truthful on their application?
Initially, you'll have a conversation and person might withhold some information depending on the level of trust, but the warmer they get within the conversation, they become open in stating what they're saying. So it's understandable, because we're, especially in the society that we're in now, we kind of want to be tight-lipped, especially when it comes down to some medical things that might be happening to us. But I've not experienced a person yet, and I hope never to. Somebody has been dishonest in filling out the application. So the answer to that is no.
Okay, that is beautiful, and I hope you won't have that experience. All right, so my second question to you: who qualifies to be insured?
All right, so It's a brilliant question, and I hear it often enough. The truth of the matter is that almost everybody can qualify to get insurance. Anybody between 0 and 8 years.
0 and 8.
Anybody between 0 and 80.
80.
80.
Oh, between 0 and 80. So as soon as a baby is born, you can insure them?
When the baby is born, yes, you can insure the baby.
Oh, that's something new to me. I didn't know that children can be insured.
Definitely, you can insure your children. But, but there are certain rules. There are certain rules in regards to insuring your child. Because if you as a parent are insuring a child, you must already have insurance before you can insure the child.
Oh, I get you. But children can be insured.
Yes, ma'am.
Okay, that's beautiful.
So I have a number of very young clients on my portfolio.
Really? So you find that parents are actually insuring their children?
Yeah, man, especially because of the living benefits, because there's a particular plan that we launched last year within the Sagicor Child Protector. And that's an excellent plan. It has life insurance, it has critical illness benefits on it. And right now, critical illness, especially things like cancer, it's not a respect of age. It can happen to anybody. So because the person are understanding of this now, I realizing that it takes a lot of capital to take care of the child in the event of, then person are looking forward, our person are very they look at it favorably when they're insuring their children now.
Okay, that's good news. So to the viewers out there, life insurance is for everyone. Once you're between the age 0 to 80 years, you can obtain life insurance. All right, so I wanted to find out from you, given the advance in technology and also with the pandemic that we're experiencing now, for persons who are watching this video and would have understood what life insurance is and the benefits of life insurance and decided that, hey, I need to go and take out this life insurance. But there's some persons are out there who are still afraid, I guess, of going on the outside. Can persons apply for life insurance online? Do you have any setup like that?
And the good thing is that yes, we do.
Beautiful.
And it was launched. It was launched before COVID as well from Sagicor. I think, and we're the only company now that actually offers that service now within Jamaica. But yes, but the coverage that you get from that particular platform is limited amount of life insurance, right? Those are what we call our non-medical plans. So for those plans, you don't need to do a medical. You just go online on our eLife platform, put in your parameters such as your age, your gender, and it populates the amount of premiums based on the amount of coverage. So the coverage goes up to 10 million based on the plan that you decide to purchase. But yes, the answer is yes, you can purchase life insurance online. Okay,
you made mention of non-medical plans. So I'm assuming you do have medical plans.
Yes, ma'am.
What is the difference between a medical and a non-medical plan?
The difference is actually you providing a certain level of evidence of insurability based on a certain amount of coverage. So even if you're getting, say, $10 million on a non-medical plan, as it states, you don't have to do anything for a medical. But if you're doing a medical plan now, for say a critical illness plan, and even though the coverage is below 10 million, you're still going to be required to provide certain levels of evidence of insurability, be it say a pap smear results for a female or a PSA, depending on the age of the gentleman. But what it is that once you're doing a medical plan, you're required to now go and sit with a doctor, give them certain information, and they're going to do a basic medical running test on you. But the amount of tests that you do is going to be dependent also on your either state of health, your age, or the amount of coverage that you're purchasing. So somebody that is purchasing $100 million worth of coverage and is our age in their early 30s, if I'm not wrong.
You're wrong.
30s.
You're very wrong, but go ahead.
So somebody in our age group that is purchasing $100 million policy, he may need to do, he's going to do a lot more than somebody that's just purchasing 15 million. Understand?
Okay. So question though, who decides whether a person gets a medical plan or a non-medical plan? Is that on the insurer or is that based on Sagicor?
No, well, the insurer is Sagicor, but it's based on a conversation between you and I, right? So you are purchasing an insurance plan, and based on the need that we discover when we're doing our fact finding, that is going to determine if it is that you're going to get a medical plan or a non-medical plan. It's going to be, you just mentioned a scenario earlier that person might be afraid that they don't want to come out, and even that they want the coverage, but they're definitely not leaving.
That's definitely a non-medical.
That's going to be a non-medical based on the amount of coverage, right? In the event that the person cannot provide evidence of suitable insurability in terms of their state of health and whatnot, so they might be extremely hypertensive, and you know that possibly it's going to be a rated product, possibly, then they might opt now to do a non-medical plan. So there are different scenarios, but the decision ultimately will come down initially the discussion between the advisor and the policy owner.
Okay.
Correct.
Okay, that sounds good. So you would use basically the person's situation to help them to decide which one is better for them.
Which is based on their particular need.
Need, right. Okay, makes a lot of sense. All right, so I remember when I got my life insurance, I was opposed to getting life insurance for years because I, like many other persons out there, I'm like, but this is not going to benefit me. You will only be paying out the money when I die. And like, how does that benefit me? But having, reading more and getting more information on the benefits of having life insurance, I quickly changed my mind and I went and I took out my life insurance. So what I want for you to explain now to the viewers, Mr. Clarke, what are some of the benefits to having life insurance?
All right, so I like the question, and I'm going to answer it this way. So life insurance, the major benefit of life insurance is that it gives you what we call peace of mind. Yes, because I'm sure after you get your coverage,
I do have
you feel a little
yes.
Good. All right, but life insurance offers it pays out in 3 different parts. Yes, if it pays out if you have a disability, if you're paid out, it pays out in the event of death, and it pays out in the event of old age. So gone are the days when life insurance was only if you die. Yes, I like to say to some of my clients, and they laugh when they listen to this, is that life insurance serves 2 purposes: is that you die too soon or you live too long. And let me explain. If you're participating in one of our medical plans, right? Plans that you have provided for evidence of insurability and whatnot, and you're paying these premiums over the years consistently. Just to say, if you pass on now, a certain amount of money is going to be paid out to your family. But guess what happened? God favored you and you did not die. You took out this plan in your 20s, and now you're almost 60. Yes. And at this point in time, you would have added a number of policies over the years while you're communicating with your advisor, which is expected.
Yes.
But for one of these particular plans now, it has what you call cash. It has built up a fund value on it. So the premiums that are part of the premiums that you would have been paying over the years was being invested, and the interest from that investment was stored on the policy. As cash, so it's building up what you call the interest fund and the cash value amount. So when you get closer to retirement, it helps to support or supplement your retirement plan. So it will be surprising. It's surprising to a lot of persons when they realize that the actual insurance policy has cash value on it that can help them in retirement. Whilst you're alive. So it pays out, as I say, in disability. It pays out when if in the event of death, which is what it's there for initially, and it pays out down the line the cash value amount in the event that you want it or you need it. Yes.
All right. So I don't want us to jump over that. I want the viewers to take the time and digest that part. So life insurance is not just a death benefit. You can benefit from life insurance whilst you're alive. And I just want you to state it again, Mr. Clarke. So just in case that missed anybody who is listening, I want you to state it again: the life benefits and then the death benefit. So
let's get the death benefit out of it quickly, because that's pretty
Yes,
simple.
please.
In the event of your premature passing, whatever you are insured for is going to be passed on to your beneficiaries who you dictated that should get this money, right? Now, in the event now that you live a beautiful long life and your premiums, the premiums that you were paying would have been invested, a portion of it would have been invested every single month that you make the payments, and the interest from this investment is now stored on the policy. So you'll realize that when you get your annual statements every year, you'll realize that there's an increase depending on how the investments are doing on your overall fund value, right? This capital is available to you down the line in the event that you surrender the policy way down the line. And so it is considered what you say a long-term investment. Why you shouldn't be looking at it like that, but it really is that. So it helps to supplement your retirement plan down the line. So you have good coverage now up until when you need it. And it gives you back some capital in hand, cash in hand, if you need it down the line. So it is it's almost what you call it's a Swiss Army knife of financial products, life insurance, because it covers a wide range of needs that you might have throughout your lifetime.
Okay, beautiful. Thank you for saying that again. All right, so just that thing though, I have with my life insurance. One of the reasons I actually went and took it out was the investment component attached to my life insurance. Whilst it's not big, it's a small percentage or a small amount of my premium that goes towards investment. But I was happy about that because at least, I can get back something while I'm still alive.
Correct.
So that's a good thing. But in terms of investments, because I know a lot of persons are looking at that point or at that part. And you did mention that, over time, the money will accumulate and persons can actually use this as a supplement to their pensions and so on. As it relates to investment, other than what you just made mention of, can life insurance be used as an investment tool any at all other than that?
You just pointed out a while ago. So I spitefully left that part out because I figured when it comes down to the investment portion of a life insurance, what you just mentioned is what most persons are aware of. Right. So you have a policy and the premium is based on your affordability and your state of health and everything. The policy is now $15,000. From the $15,000, $5,000 goes into what we consider additional premiums, which would have been the investment portion, right? So the $10,000 is carrying the risk. So the $10,000, that's a portion that I just explained. The $5,000 is what you just mentioned. Every single month, that money goes into straight investments, and you're able to pull on this capital if it is that you need it straight throughout the life for the policy, as long as they keep the policy in force. So that's the beauty about life insurance products. It gives you the blessing of giving you the coverage for the entire time period that you have it. And then the side piece now is that you get the investment, and the investments do pretty well because they are unitized investments as well. So it does very, very well.
So would you recommend persons using that investment component to their life insurance as a saving tool? Yes, so instead of saving in your bank, regular banks, that you get 0.0001%, would you recommend persons utilizing their life insurance as a way to save?
Yes, I highly recommend that. Remember what I said earlier, it's a simple definition of what I do is help persons to get control over their monies.
Yes.
Because if you don't control your finances, then it will control you. Yes. So what life insurance helps to do as one of the benefits is that it gives you, it's almost like a guaranteed or a structured saving plan. So whereas you can willingly put money in the bank account if you so desire every now and then, right? Because you have a life insurance product and because you're expected to pay the premium every single month, you're expected now to be saving every single month. And as you rightfully said, instead of having the money sitting in the bank really not doing much, this money is now buying units or it's being invested in whatever funds that you invested in every single month, and you have the ability now to get back some return on it. So rather than just as a saving, it is an investment. It's a nice investment tool that will give you comparable returns down the line. So it's an excellent tool, and I've never had a complaint. I have clients that have been working with the company long before I became an advisor, and they're excited because the little savings that they put on the side, you might consider little, right? But you can dictate how much you put in it every single month. Good. So the savings that they have on the side comes now to help you when you're purchasing a house. Persons that are having children, right? Purchasing properties, right? Somebody might be sick and it's a good source of an emergency fund for them. So that investment on the side of life insurance has deemed very helpful for a lot of persons. Yeah.
So would you consider that to be a long-term or short-term investment? You did make mention of persons, and here on Just Sharika, we talk a lot about housing. So say, for instance, someone is there saving some money to offset that deposit cost. Would you recommend or suggest to that person to use their life insurance as a maybe short to medium-term saving account that they can use to put that money together to assist with their deposit?
All right, so we can use it as a balance and use some of it, right? Because we have different products that would recommend for particular needs. All right, so we have products specifically to say, here we go, and if you're going to be saving towards your property in another 3, 4, 5 years, we have products geared towards that. But the amount that you're putting in the investment on the life insurance will help to supplement. Because when we're looking at what your needs are for the next 3 to 5 years for that property, we're going to calculate the expected the amount that you're putting in and what is expected you're expected to get from that investment over the time. So it helps, and I do recommend it highly.
Okay. So what are the interest rates on these investments?
So the interest rates are not guaranteed. So it's going to be dependent all the time on the units or the funds that you're invested in, and it's a range of funds that we have. We have the 13 funds that you can invest in, right? So that discussion is going to be had between the advisor and the prospect or the client at the time, depending on their risk appetite, which funds to invest in. So prior to COVID, I could tell you that the rates are up to 35%, and in years gone by, right, when the stock market peaked, you would have heard that the return in some funds are up to even 80-90%. So it really does depend on how the investment funds do. So that discussion each month, these things will change and the projections will change. So that will just definitely come down to the return that you're going to get from yours is going to be dependent on the conversation with us as an advisor and a potential client to see what your risk appetite is, and based on the fund that you want to put the money in now, that's where you see your returns. But the returns are always very good.
Okay, and you made mention, and I mean, yes, I'm still, rejoicing about that. The percentage, I mean, even though you said it's not guaranteed, and we understand that with inflation and all of these things, but it is much, much better than what you would get having your money rotting away in a bank account.
All right, so I won't say having the money rot away in the bank account, because
it is rotting, Mr. Clarke.
The banks serve their purpose, and that's why Sagicor, as a suite of product, we have a bank within our group. So the banks serve a purpose, right? It serves a purpose. So don't knock it. It's just the amount of money that you should have in your bank account. Because if we're not going to talk about, say, an emergency fund, you want the emergency funds to be somewhere where you can readily grab on the capital if you need it without any form of hindrance, right? And a bank account is a nice way to put that money. Understand? Right. But it's just now for persons that are thinking, all I'm going to be doing is saving this money in the bank. Now that is where the challenge comes in. So you should always have a balance. Some monies are supposed to be in savings that you can readily grab on it in case of emergency.
But everything else, put it somewhere else.
So everything else can be diversified based on the type of investments and your type of risk appetite. So you're right in that area.
And you made mention of risk. Can you explain a little more on that? Because I think I remember when I went to Open Mind, there was something about medium risk and aggressive or something. Can you explain a little bit more on the risk components?
When it comes to investment?
Yes.
So when you talk about risk, you usually have three parameters that you use, right? You're on a low risk, so you're very risk averse. You're moderate, which is where most persons fall, or you're aggressive. Right? Like initially, I thought I was an aggressive investor until when COVID hit and I saw some of my investments dip and I said, so I find myself doing it a little bit more to the moderate, but I understand the benefit of even though investing now while the markets are low and whatnot. So I'm not crying because of the depreciation in the value of my accounts, because I have not sold out. So I still have the value. But if you're low risk, you're looking at persons investing in real estate or bonds or things that are going to give you guaranteed returns or close to guaranteed returns and less risk. Moderate, you have a mix of equities and stuff, so the market can go up and come down, but you still have a little balance with some of the safer investment. And high risk now is going to be more on the money market tools, equities, your money. But think about it this way: there's a risk reward trade-off. The higher the risk is usually the higher the
more rewards. Yes.
So if you're younger and you have that appetite, then I recommend that you invest certain percentage of your money in equities, right, and then the rest in safer investment. So it really now does depend on the individual, right? And then based on the answers to a certain amount of questions, which I might even ask you if you gave me $100,000 now, and or time period for your return is just 3 years, but within 3 months you come to me and ask me, Mr. Clarke, what's the value on my $100,000? And I tell you it is $80,000 now. Would you want to kill me?
No. Because
Right.
I
Why?
understand that, well, if I'm giving it to you to invest, I would be thinking long term. So I know that even though it's 80,000 now, maybe by next year it's gone to 110.
Good. So it's good for a person to understand that. Yeah. So when you're investing, it's usually not for different. It is not for a short term. Investing is a long term thing. Yeah. Because what is the difference between the distinction between investments and savings is when you're investing, you're using that money to purchase an asset with the hope that the asset is going to give you back your investment amount, your principal, plus it gives you a return. Right? And you can have positive or negative return. It usually trends up, especially with equity, but anything can happen. So it's good to understand and know that. Yes.
Yes, but, and I think that's something that a lot of persons struggle with.
Right.
I don't think a lot of persons can or understand or can tolerate. I'm not even sure what it is. When they tell us about long term, we can plan for today, maybe up to next week, maybe up to next month, but tell them 10 years down the line, most persons can't. They can't.
And the thing again, Sharika, and that again is one of my purposes, right? To have that discussion with you, because you don't want to plan that far ahead. You have goals that you want to achieve by that time. But in order for us to achieve that particular goal, right, we need to properly plan for it. Because somebody will say that, boy, I want to buy a house for my mother in 5 years, and I want to own my own house and get married by in the next 10 years based on their age. But if you talk about planning towards these things, no, man, we just live. Understand? That becomes a challenge.
Or maybe even the popular one, me don't might live the seat. When we dead, and that's what I hear from a lot of persons, because they don't know if they're gonna live to see 5 years, 10 years, 2 years, so they don't plan for it. Right.
But it is important to plan ahead. Because if you fail to plan, they say you plan to fail.
That's right. So, and these are the conversations you have as advisor with your client. So they are aware of all these things.
Yes, man. Some conversations are longer than some initially, but for everybody, they get to understand the benefits of having a balanced type of portfolio and how everything fits into the goals that they have planned for themselves.
Okay. All right. So there's another question I have for you, Mr. Clarke, on the basis of life insurance.
Yes.
Can someone be uninsurable?
Uninsurable. You can, even if you're severely ill, there are still policies that you can get, because remember, we did say that you have policies that you don't need to require any form of medicals. So uninsurable would come if you've passed the age of insurability. So you carry somebody to me that is 85 years old and say, oh, I want to insure him. He's somebody now that is uninsurable based on the age group that you fall in. Right. But if your state of health is pretty much deplorable, there are policies that you can get that will give you life coverage. Be it if you're very ill and you're not able to get an underwritten, what we call a medical plan earlier, then now the coverage that we explained earlier about the non-medical plans that you're going to be able to get, it's going to have a limited amount of coverage. So the coverage that you can get is capped. With the medical plans, there's no cap. You can get any amount that you can afford, that you can justify that you need. But once it is a non-medical plan, especially when it's based on your state of health, you're going to be limited in the amount of coverage that you can actually get. So that's the challenge. But everybody still can get insurance as long as they're not past the age.
So if I want to get that 10 million and I do the medical, what can hinder me from not getting that 10 million in life insurance?
If you fall within the age, yes, and you provided it, you did the medical and your medical checks out and everything is good, your policy will be issued. Oh, okay. I was wondering if there will be some little funny thing that will hinder me from not getting it. So once the person falls within the age and the medical is fine and they can afford the monthly premium, no problem. Correct. And you're following clearly. Beautiful. Thank you so much. All right. So, Mr. Clarke, I do know that there are different types of life insurance. Can you explain to us the different types and what they are? All right. So when you talk about life insurance, we're talking about there are two major types of life insurance. You have whole life, right? And you have term insurance. So when you talk about the two, let me ask you, if I just mention the terms to you, say two major types of insurance, you have whole life and term insurance. What do you think term insurance means?
Term sound short, like it's just for a period. Whole sound like it covers your entire lifetime.
And that's what it is. So a term insurance plan is for a specific time period, especially it's usually bought for a specific need, right? Then the whole life now is for your entire lifetime. So it stays with you. So the policy that you have, the policy that you say that I know that you have, is one that will carry with you or continue with you until your last day here, right? But if you have a term insurance plan now, it will be dependent on the type of term you plan. So your term plan that you bought. So you can buy a 10-year term, you can buy a 30-year term. But that now means that at the end of that period, you're now going to be required to either convert that policy over to a whole life plan, or you're going to just allow the coverage to disappear. So it is. I like to use an analogy to explain the difference between the two for persons. When you're renting and owning your property, yes. So if you're renting a place, the same place you're renting, you live say in Cherry Gardens. You're living in Cherry Gardens, then you're renting the property in Cherry Gardens. You have no equity in the place, but you have the security of knowing that there's a roof over your head. That would be like a term insurance plan. So there's no equity in the policy itself, but you can have you have the coverage. However, if you have that same policy, if you bought that same policy and you're paying some money, mortgage is going to be a little higher than the term, right? It's going to be a little higher than the rent. But if you're paying the money that you're paying every month is giving you equity in the property. So technically, whatever you're paying is it's slowly paying down the amount that you're going to owe for the property. Over time, you're going to own it. Yes. So that is one of it. That's not a difference. One is just carry the risk alone, and the other one carries the benefit. So remember earlier when we discussed the fact that the life insurance can give you a benefit down the line in terms of helping to supplement your retirement. That is what the whole life insurance will help you to do. The term insurance is not going to help you to do that. However, there's one little loophole with the term. There's a rider that we can put on it. It's called a return of premium, where at the end of the term premium, the term period, you're able to get back a large percentage of the premiums that you'd have paid over the time period. So these discussions, as I say, is going to always come down to the actual need of the client at the time when they purchase the policy. Okay. But those are the two. But those are the real two types of insurance: permanent, and temporary.
Okay, so it's term and whole. I am not remembering if at the time when I took mine out, if I was told what policy I was getting. I wanted one and I just got one. So to be honest with you, I'm not even sure which one I have now. I would have to go and check. I hope it's live. But if it's term, if someone has term life insurance and they decide to switch over to whole life, how easy or how difficult is that?
Very easy, very easy, very easy. You call it. I've done a few in recent times for persons that would have purchased years ago. Because sometimes the purchase of a term insurance plan is based on affordability at the time, and then in 2 or 3 years you're able to now purchase the whole life. So right, you say you want to come out of the rent house now and you want to own the property, you call. Simple filling out the documents and paying the additional premiums that you're going to be required to pay per month, and that is it. Because one of the benefits of the term insurance is that once you're doing it, you don't need to provide any evidence of insurability. So you have 20 million in term insurance, you can just convert the entire 20 million to 20 million whole life and just pay the premium. So it's very easy.
Okay, so just in case persons are out there and you have term life insurance and you now see the benefits of having whole life and you want to switch, you just need to call Sagicor or your advisor or your agent.
Just reach out to your advisor, because that's one of the main things that I want person to do. Keep in contact with your advisor. It's important to do that, because what all of us really do is we ensure that your benefit that you purchased remains viable and it is there for the day that it is needed. We don't want it to just you pay for something and you don't get the benefit. So just remain in contact with us, right? As we continue to remain in contact with you and as we may continue to help you, right? So that's a good thing to tell them.
Okay. Beautiful. So follow up with your agent. to ensure that you are getting the most out of that person and that person can guide you accordingly.
Correct.
All right. So a question though, given those two types of insurance, can I have more than one? Can I have both?
Yes. So in my situation, I have both.
Oh, but why would you need both?
Why would you need both?
Yes.
Remember, I said it earlier. It's what earlier when I said that you're going to purchase insurance based on a particular need.
Okay. Yes.
Right. So for one, no, if it is that you want to purchase a property, and you, as you know, when you're in order to purchase a property to get a mortgage, you're going to need life insurance. It's not if or but. Life insurance has to be on the mortgage. Full stop. Right. So you can now determine at that point in time if you want to purchase term insurance or you want to purchase whole life insurance. And as I say, that again is going to come down to affordability and the conversation at the time and your need. Yes. So based on one investment that I was doing, property investment I was doing, I needed some term insurance to cover that. I purchased that. But the majority of the coverage now is whole life because I know the value will continue to increase for that policy. So I'm building up equity in that, and it will the premiums will remain the same unless I choose to increase over the years.
All right. So that's good to know. So persons out there, based on your situation, you can have the whole life, or you can take out your term life. You can have both. Why not?
And you can also mix it.
And you can mix it. How do you mix it? Explain.
You can mix it on the same plan. So if your need for insurance is say 30 million, and when you're purchasing the 30 million, you can afford say $20,000. But if you're going to get the 30 million in whole life, it's going to exceed that budget. You can get a little less whole, and then we'll just add a term rider on it to bring it up to the total coverage of 30 million. Because once, as advisor, once we're sitting with you, what our discussion is going to be geared at is providing with the right amount of coverage based on your need. Not just to say, I'm going to give you 30 million. The 30 million has to come down to a particular science to see what your needs are. Because
what if I just need more money and more
What if you just need more money?
Yes. I don't have I just want all of the money.
You just want all of the money. But that's a difficult discussion to have, but we still have to understand exactly what you want the coverage for. What's the need? You just want to buy an extra 100 million just because you can?
Yes.
That is also in your right.
Yes.
That is also in your right, as long as you can prove and provide evidence of affordability and evidence of age, you can get the coverage that you require. But
beautiful.
But the nature of the conversation should always come down to ensuring that whatever coverage you have is based on the needs that you have or the plans that you have.
And the need is just to ensure you have enough money.
Enough money. As I say, if that's your need, then no problem. We can have that discussion.
Remember, you said peace of mind, Life insurance gives you peace of mind. And for a lot of us, peace of mind is knowing that the money is there when we need it.
Right.
All right. Question. How much coverage is enough coverage? Can someone be, I think the term is overinsured and underinsured?
I don't think I've ever met anybody that's overinsured, but I've met the fact that I continue to remain viable in my career. I consistently meet persons that are underinsured. Because most persons are, because not everybody understands the real value of insurance. And sometimes you might just buy a coverage and I approach and say, let's have a discussion about your insurance portfolio. And you look at me and say, I have insurance already. But when I have a discussion with you, you only have 5 million. But in your situation now, that 5 million only represents a replacement of your income for 2 years. And you have a 2-year-old baby. So think about it this way. You're being underinsured is based on your need. So if let's just do this calculation together, and this is just a very simple calculation so the person can understand. So for somebody that is required to spend at least say $2 million per year on their household to make sure that everybody's there. So they have wife, 2 children, and they're benefiting from his income. Right? He's the main breadwinner for the household, and his life insurance is 5 million. So if God forbid he's driving on the road and then get a message on his phone and he look down on the text message and somebody else that is driving on the road does the same thing and there's an accident. Just say, and he's now dead, right? So he's gone. The coverage amount that is paid out to the beneficiary, which I'm assuming in that scenario would be the wife or the children. That's just 5 million. That wife now has to take that 5 million to ensure that the two children that they have, which one is 2 and one is 5 years old, is able to now pay for the mortgage if needs be, if it wasn't properly structured, or to pay the rent if they didn't have a mortgage, to send the children to school, to ensure that person eat. You didn't even talk about burying him yet. Some debts that he might have, that person might be calling on the debt and all these type of things. So the 5 million in that scenario, would you say that is overinsured or underinsured?
Underinsured.
Because within a year or two, that money is depleted.
That blows out.
Right. So there are calculations that we can use now to determine exactly what the needs are in terms of insurance for every individual. So all of us might end up buying the same exact product, but all of us are not going to get the same amount of coverage from the product because our needs are going to be different.
Right.
So in that scenario, a simple calculation can be, let's replace his income for 18 years because his youngest child is 2
under
years old.
18, right. And is there, as you make mention of that, I'm sorry.
Yeah, no, go ahead.
Mention of that, something comes to my mind. I know a lot of persons out there who I have been trying to convince, and a few of them I have, and they would have gone and taken out their life insurance. But for persons out there who are still watching and still not convinced as to the benefits of life insurance, because a lot of persons use this, the fact that they are not high income earners, the poor, I don't have the money, they don't see the importance of it. Can you say something to those persons, especially persons who have children? Because I always say to people, oh, if you have children, even if it's one child, and don't have life insurance, because if something should happen to you today, you will leave that child with nothing. So I never understand and still can't understand how persons can be out there, especially parents, and you don't have life insurance. Even if it's the most basic plan where you pay, I think, I remember seeing the document that you can get life insurance for as cheap as a little bit over $1,000 per month. Right. And I'm like, even if that is what you can afford, take it out. So just in case anything happens to you, and even if it's just $1 million, at least your family can bury you out of it. And at least your children or your child have something. So I would want for you to say something to the persons out there who think they cannot afford life insurance.
Well, Ms. Wilson, I don't think I can even say, I'm going to say something, but what you just presented a while ago, I don't see where I can even top that, right? So it's really that simple. If you can't afford to purchase some amount of insurance, you really can't afford to die. Because I'm sure that if you have somebody that's dependent on your income now, right, and you're saying that if you die, your income immediately stops. But their needs are not going to stop. They still need to rest somewhere, still needs clothes, you're gonna still need to eat, they still need to go to school. That's if you have children, that is. You understand? If you have a mother that's sick, your mother is still going to need her medication, still needs to be taken care of, right? Yeah, everybody's going to have some need. So if it is that you cannot find within your budget to actually put some coverage in force just in case that you disappear and that income goes, right? Then we're serious have a problem. You can't afford to die. And if you can, and you cannot tell when you're going to go. No, none of us can tell.
That's it.
I think one of the things I like to say is that the challenge is because none of us has ever died. So we're here and we never dead yet. You understand? We know other people. We don't
plan for it.
So we never dead. So because we never dead, some person don't see the need. But it's life insurance. It's not death insurance, it's life insurance. It's really for the person that in the event of your death that are going to live on after without you. Right? You want to ensure that these persons are secure. They might not be able to live very lavishly the coverage. I'm not saying to leave money for them to just go and live lavishly on your money, but I'm saying at the very minimum to ensure that the standard that you've gotten them accustomed to, that they're able to maintain that in the event of your passing. So every person now that is earning a capital earning income should be able to insure themselves for the person that are dependent on their income, or even for just the benefit of what you said earlier, just to say that in the event of my passing tomorrow morning, I'm able to go to the next world in dignity. I can be buried. I know people say, oh, they can burn me, they can dash me because I'm done dead already. I hear the argument and I understand for some. You understand? But that's part of things.
And as you talk, I've experienced that, Mr. Clarke. I've seen persons who died, and the family literally have to go door to door begging money to bury the person. I've witnessed that.
And it continues to happen. I used to, when I was younger, I used to wonder, because insurance, the research of insurance was that it was made for the wealthy to stay wealthy, yes? But we all have access to the information. You understand? We all have access to the information, but because of distrust or mistrust, or just even lack of information for sometimes we don't go ahead and buy the products. Because if you think about persons that are educated enough to purchase the plans, when they passed on, the people, your family members can bury you with a little bit more ease, because they're not stressed out in terms of who have to borrow a loan, who have to carry to a goat, and all these type of things, just to ensure that your children can even live after you leave, right? If you're a positive, I like to say this, if you're a positive while you're alive, when you die and leave here, you should also be a positive. You should not be a negative. Your family should not be worse off for you leaving here. Yeah, you understand?
I agree.
And it is not deep. The thing is that persons think that they need to spend a lot of money for insurance or for what they need. No, that is not true.
What's the cheapest? Because I want them to hear this.
Right. I'm actually going to go into a folder right now in my phone for one of the non-medical plans right this second to show you, to mention something. For a male that is, say, 30 years old. I just even some
right.
So a 30-year-old male can get a policy for $1,400 for $1 million, and that is just.
And is that $1,000 per day?
No, it's $1,000 per month.
$1,000 per week?
Per month. So let me calculate.
Is it $1,000 per fortnight?
Not at all, my dear.
$1,000 per month.
So imagine $1,000 per month divided by how much days? 28 days. That's all? 28 days.
On
divided by 28 days.
February.
Boy, I leave them to do the calculation because it's pitiful the amount that you pay
per day.
Minimal.
Right, and so, that's why I keep on saying to persons that don't understand, even if it's the cheapest policy you can afford, no. You take out that one until your situation improves, you get a little better paid job, then you call back your advisor to say, I start getting a little more money now, so I can put $500 more on it, I can put $1,000 more on it.
Correct, and that is exactly it. Because I didn't do based on the amount of coverage that I have now. Because I have my family depends on me, and I have to ensure that they're okay. So I'm happy about that, knowing that I have that peace of mind. If I'm gone tomorrow morning, my wife, my mother, brother, sisters, they might bury me, that little video with the man that down to the coffin. I might get that type of funeral because we make sure they're in a position that they should be okay if I'm not here. But I didn't start there. I had to start my first policy was
work your way up. Yes.
Right. So it really does depend on even just your state of mind and the education about it. So that's why I'm happy that I'm here.
Yes.
Just try to shed some light on it.
Yes, and I hope the persons are watching. You're taking note, and I will be leaving Mr. Clarke's information down below in the description box, so you can call him if you are out there and you need life insurance. You need someone to talk to in terms of your finances, because he's a financial advisor. So he would advise you. So take the advice. All right. So I'll be leaving his information down below. And before we even get to there, Mr. Clarke, can you just state your telephone number in the middle of the interview? So if they can't watch all of it and they reach this part and want to write down your number, what is your telephone number? How can they reach you?
Reachable at 876-325-6944. I'm going to repeat it, 876-325-6944. You can get me via WhatsApp, you can call me, you can text me. Easily approachable.
All right. And as I said, I will leave his information down below, so make sure you use him up, call him, check out your life insurance plan and any other plan him have. When him advise you based on your situation, you will know what other stuff you can get. All right. So in continuing, Mr. Clarke, I know that at times persons normally say that women are less, or should, let me say that over. Men are higher risk. Men are higher risk than women. Is this so in the world of life insurance?
So what you just mentioned is a factual statement. So it can't be in any, we can't have it in any disrepute. Us as individuals, as men that are taking care of ourselves and whatnot, might disagree, but the facts are the facts. Yes. So when it comes down to life insurance, full stop. Women pay less than men. So us being born on the same exact day, same exact day, same exact time, we're in the same exact state of health. Your policy will be better priced, or cost a little less than mine. Yes.
Okay, and why so?
You mentioned all of it earlier.
Men are risk.
And let me just throw this in. It's just for first, just think about it. Can you remember the last time you went to the doctor, Ms. Wilson?
Yes.
For the average man that I asked that particular question, they don't remember, and that's one of the, but that's just fact. Women will go to the doctor for every little thing, and most men. So there are exceptions to all of these rules. So most men will not. Will not. So that's just the harsh reality.
Why don't you go to doctor?
I guess it's how we've been socialized in this culture. A lot of things coming down to culture. You understand? So it depends on the household that you were brought up in and things like that. But initially I was not a fan of doctors. I grew to become somebody that now if I get ill, I go to the doctor. But sometimes, even my situation that I claim to be educated and whatnot, sometimes I say, boy, you know, I can't go. But I really don't go to the doctor as often as I really should, just like anybody else. But I at least know because of, you see, my wife, the female in my life now, ensure that I go on a particular time. Yes, so I know better now, so I do better now, to be honest.
All right, beautiful.
But I wasn't always like that.
Okay. Well, I'm happy that you would have changed and you see the need to take better care of yourself. And sometimes, you know, we have to listen to our bodies. You know, it's only one we get. So if the body say, you know, something is off, we need to look into it, and not all the time rest and some bush tea is enough. Sometimes you need to go and get medical advice, just as how we're here getting some financial advice from you to ensure that our money and our life is in good financial health. You need to go and ensure that your body is in good physical health. So men, hint to men out there, go see a doctor, do a checkup to ensure that everything is working in the way that it should be working. All right. So another question, Mr. Clarke, as it relates to the policy. Can life insurance policies become dormant or lapsed?
All right. If you have, let me answer this very simply. There is a simple answer is yes, but let me put it in this way. When you get your JPS bill, and my apologies, JPS is usually used as a scapegoat out there. Understand, but they're the most popular utility company. Yes. When you pay your light bill, when they hook it up, so you buy a brand new house, you get a brand new house, and they put on the light bill on it, they put on the electricity on it, and you get your first bill, and you pay that bill, and you pay it for a year. If you stop paying that bill, what happens?
Cut it off. You don't have no service.
Good. But if you continue to pay the bill, what happens? You
will continue to benefit from the light.
And that's the same thing when it comes on to a coverage, right? You get the bill, you bought it, you sat with me, you sat with an advisor, we broke down the need for the coverage, and we said, listen, this is what we're going to be doing, yes? And this is what's going to cost you up until the time that you don't need it anymore, right? So if you consistently and continue to have the need, then you continue to pay for it. If you don't pay for it, then the need is not going to be there. It's not going to be there to protect your family. So it's the same thing. So with coverage, you get the contract will state that it gives you a 30-day grace period, if you may, for you to make the payment and stuff like that. And So things like that will happen, but you'll get some time to pay the policy. So if you say, and you're not charged a late fee to make the payment within that 30-day period, so it should be paid. So you pay the policy, you can still pay the policy, you continue to have the coverage amount. So yes, a policy can lapse it would only lapse for non-payment on the account, nothing else.
Okay. Go ahead. Sorry.
Come on, I would just say that you will continue to you'll not lose your coverage. Your policy won't lapse if you continue to pay the premiums. As long as you pay the premiums, your coverage and everything will remain in force.
Okay. So question on that. So we know that we are now having a pandemic and a lot of persons who would have lost their jobs. So in an event like that, I'm not working, and so I can't make that monthly payment, or I have not been able to make that monthly payment. You made mention of a 30-day leeway. What if I was out of a job for 3 months, 6 months, and I didn't make a payment? Can I now come back and reinstate that same policy?
All right, so you can, right? But I want to say this. Initially, when we started up by having a discussion, and I was telling you who I was and what I did. I did it very simply. I didn't go into all the long things that I do, which is what I specialize in. I have to give you control over your money. Good. So in giving you a rounded financial portfolio, we're going to be looking at what we call the emergency funds. So what the emergency funds should be, how much money you should have there, and it means that if you're out of work for 3, 4, 5 months, you're supposed to be able to cover your necessary expenses. No. Nobody planned for COVID. So if the 3, 4, 5, 6 months pass and the emergency fund is depleted and your policy is now behind, there are a number of things that you can do. One, remember that there are investments that are usually on the side of the policies if we did that, right? So that's one option. So if you had a policy that does not have that, any investments on it, or you didn't have that, you can now decide with the advisor. That's why I said you have to remain in contact with your advisor. You can call the advisor and say, listen, man, Mr. Clarke, can I afford this for at least for the next 3, 4, 5, 6 months? Can I do a reduction? You can do a reduction until your situation is better. So you can reduce it to a amount that's affordable for you within your period of turmoil. And once you bounce back, you're able to re-increase. It's simple. So it's just having a discussion and maintaining that relationship with the advisor that will help you to navigate these waters. Yes. So just don't do it on your own. That is why we're here in the career, right? Just to help you to navigate these type of issues. If you have a cold and you don't know what kind of cold it is, you go to the doctor, right? You just call your cousin or drive a truck to tell you what to do with it, right? You call the doctor. So likewise, if you're in a scenario now, you don't necessarily have to call your best friend because I need your best friend pick my own for a living, whatever. I don't know. I'm just saying, right? You speak to your advisor. He's able now to better fit to give you an idea as to what you can use to navigate whatever situation you're in. Simple.
Okay, makes sense. That makes a whole lot of sense. So if you are out there, well, if you have Mr. Clarke as your advisor, he would have pointed out all of these things. So you probably would not be in such a bad space financially and cannot make your monthly premiums. But we know life happens sometime, and Mr. Clarke was not your advisor. And so you never get this fulsome information and guidance. So now that you have that information, you're going to call Mr. Clarke and he's going to help you to sort out all of those nuances. All right. So Mr. Clarke, as I said earlier, we talk a whole lot about housing and buying houses and getting real estate and which house coming out and all of that. And you did make mention that life insurance and home ownership goes hand in hand. Can you expound a little bit more on life insurance and how it impacts buying properties?
All right. So for most of us, we don't have that capital stored up that we're going to be purchasing the house cash. To buy the house cash, you don't have to use a life insurance because there's no need for it in that regard. Good. In that regard, you might need life insurance for different purposes, like for estate preservation purposes, which we can get to in another conversation. But if for like most of us, like myself and most of us, we need to go to a financial institution for them to say, listen, we're able to now lend you $30 million to purchase the property that you say you want to purchase, because your salary says you're able to pay this amount of money based on the amount of debt that you have on whatever. No, that financial institution, in the event of your passing, they don't want to come and take your house. They don't want the challenge of buying, of having to resell the house. That's a challenge for them. What they want in the event of your passing is the money. So what they're going to do, so me or you know, we go to JN, we go to Sagicor because we go to Sagicor, right? They go to the bank, and the bank says, or Sagicor Life, there's the mortgaging. You go to Sagicor Bank, and Sagicor says to you, all right, you're pre-qualified for the same 30 million. You're going to get the 6 point something from NHT, and we're going to lend you the 23 point whatever, right? So for this amount, the 23 point something, that amount needs to be insured. If Sagicor is taking on the entire portion of the loan, now you come to me and say, Shamar, this is what the bank says I need to have in terms of my mortgage. That amount that they give you is going to be insured. The 23 point odd million that they're going to lend you, it is going to be insured. They have two types of insurance now. They can put in what you call Creditor Life insurance. The Creditor Life insurance, the bank does put the insurance on it, and you're paying for this coverage. So remember the amount now, 23 point odd million. And after 15 years of paying for this mortgage, right? And you only have 10 million, say you just have 10 million, because you have very good years and there are some years you paid on the principal. You only have 10 million left on the property, and you die with that 10 million now, right? Initially, when you purchased the property and started paying the mortgage, you had 23 point odd million worth of life insurance. With the Creditor Life, when you die, own 10 million, only 10 million is going to be paid out to the financial institution, and that's it. So the additional 13 point odd million that would have had for your benefit, that could have gone to your beneficiaries, that exists. So you'd have been paying for something that the only benefit for that amount is if you pass on. That's really what it is. So it is securing the payment for the mortgage, which is an excellent thing. It's an excellent thing, because at the end of the day, when you pass and you leave here, the mortgage is fully paid off, right? So it's almost like when you hear that somebody pass off on the NHG, host it, pay off, or whatever. It's not that the government is just paying off the mortgage for you. It has life insurance on it. So that's why it's
in your mortgage that you pay monthly.
Correct. So now, why would you need to have your own life insurance instead of having the Creditor Life insurance? Right? Think about what the scenario I just used. So you having 23 point odd in terms of term, and you still pass off at when you owe $10 million left. The 10 million is paid now to the company, so you pay to Sagicor Bank, and now the 13 point odd million now goes to your son, your daughter, your mother, whoever you left in your contract as your beneficiary.
All right, stick up in, Mr. Clarke. So I want person to really understand what you just said. So you should take out, once you're purchasing a home and you're going to a bank, a lending institution to take out a mortgage, it is compulsory that you have a life insurance component attached to that mortgage. So what we're explaining is that if you should take out that life insurance directly from the bank or the lending institution that you're getting the mortgage from, they will attach what is called a Creditor Life that is attached to the mortgage. In the event that you die, before paying off this mortgage, they write off that mortgage. So your family that you have left behind won't have a mortgage to pay. However, there's a downside to that. If you take out the Creditor Life from the lending institution that you're taking your mortgage from, if you had started out, you take a $10 million house, when you died, you have $5 million left. That $10 million coverage that you started out with, the bank will take the balance from that, but the part will left over, your family must eat. So that is wiped off clean. As opposed to if you take out your own life insurance with Mr. Clarke, your family will still have a paid off home, but also the balance that is left from that life insurance. Did I get it right?
And you got it perfect.
Beautiful. So I hope
said it even better than I did.
I hope the persons out there get that and see the difference between getting the life insurance from your lending institution as opposed to taking out your own personal life insurance. And in most cases, when you go and take out your own personal life insurance, it normally ends up to be more cost effective.
Correct.
Pay less.
Correct.
All right, so beautiful. So no see why no need to call Mr. Clarke and get him the life insurance, because a lot of us here on the channel and watching are so interested in the whole real estate and buying homes. So don't wait until you need the house to get the life insurance, because with life insurance, and Mr. Clarke, I need to tell you this, with life insurance, there's normally an age. The older you get is the more money you pay.
Thank you.
So it's better to take it out young when you're young and healthy.
Thank you.
Because you pay less. So tell them about that part.
Ms. Wilson, I'm happy that you mentioned that. I was hoping that you asked me that in a question sometime in the conversation, because that is one of the things that I said. Life insurance is bought with age and good health. Yes? So you're young and healthy, purchase insurance now, because when 2, 3, 4 months down the line, when something happens to you and you can't get, you're now rendered uninsurable in terms of getting a whole life or underwritten plan, you're going to be the one that's upset with yourself. And the policy itself is going to increase every year in terms of the cost of the policy. So get the coverage while you're young and in good health, because life insurance, the price or the cost increases every year. So every year that you're getting older, you're going to be paid more for the coverage, right? And so get it when you have good health and you're young.
All right. And that's not to deter the persons out there, maybe in your 40s, your 50s, late 30s, 60s, 70s. We're not telling you not to go and get your life insurance. If at that age you never have any coverage and you're watching, there are still a lot of benefits to getting life insurance, as you would have heard earlier in the discussion. So still go out and get your life insurance. But for the young persons out there, you just come out of college, just starting your career, you just have your new job, go take out the life insurance. Because the younger you are, the less premium you will pay, and you get more money.
Well, Ms. Wilson, you sound like a financial advisor yourself.
You know, me probably need to come work up at Sagicor. You don't want an assistant?
Come on. When we finish your talk, you just call me.
All right, I really do love these kind of things. As I told you during our before conversation, as soon as I found out about the benefits of life insurance, I tell everybody. I got everybody in my family to get their own life insurance. And I got a few of my coworkers also to go out and take out life insurance. Because I'm that kind of person. Once I find out about something, I can't keep myself still. I go out and I tell everybody about it.
Excellent.
So, and life insurance is one of them. So go take out on the life insurance and make sure you call Mr. Clarke. All right. So another question as it relates to home ownership and life insurance. You did make mention of the Creditor Life. I know that there is another one that they normally talk about, the Peril. Is it Peril?
Peril?
Right.
It's Peril.
Can you explain what that is for persons who don't know, like myself? What is that?
So Peril insurance is really insurance on the actual property itself. Not on the money that is borrowed, but on the value of the property. So buying a house and say the house is $10 million, we're going to have two types of insurance, the life insurance and the Peril insurance. So the life insurance is covering really your life just in case of death. So the monies that the bank needs can be paid off. But the Peril insurance is covering the actual property now. So you're talking about acts of God. So if the house burned down, good. So that's the difference. So life insurance is covering on the life, and the Peril insurance is actually on the property.
Okay. All right. That is very clear. So the life insurance and the creditor, which is a life insurance. So your personal life insurance and your creditor life covers you, the individual, and the Peril covers the property.
The property, correct.
All right. Thanks for that clarification. All right. So I think we're doing very well. So I only have one more question for you, Mr. Clarke. For persons who are out there and they would have been paying their life insurance and maybe now have a disability, they met in an accident, or the sad part about it, the person died.
Right.
How can persons, whether it's the beneficiary or the individual themselves, how can they come to Sagicor? Well, if you died, your family, how can they come and make a claim?
All right, so we have a full department, as you'd imagine, for that, right? So there's a claimant form that you'd fill out, provide the evidence of death, right? Whatever you'd have gotten from the hospital or from the doctor. Provide the proof of age, which would have possibly been, passport or some identification for the deceased. Provide the ID for yourself as the beneficiary. Take that in. Any other document that they would require from you in terms of police report or anything like that, it will be requested depending on the type of death or whatever, for the policy, for the amounts to be paid out. So it's a somber. The question is a somber question because I just remembered a while ago my first claim for a client, and So the claimant form that comes from us to you for you to fill out, the document that provides proof of death, so the certificate, the proof of age for the deceased, your information, and if it is that you want to check to yourself, then they can contact Sagicor, record a check, or if you want it to be banking information, if you want it to be sent to your account, banking information is provided, and that's pretty much it.
How long after making the claim will the funds be dispersed? Do you have like a timeline that you can share?
Apparently, as quick as up to 48 hours after, you can get the policy, you can get money. Yes, man. As quick as 48 hours. So it will determine what will hold up anything is you providing the document to us. So once everything checks out, Sagicor is not going to hold on to the money.
So in the event that whichever one, the person is rendered disabled and now need this as a, all right, so in the event that the person is disabled, is it a monthly payment or is it a lump sum payment that they get?
It depends on the policy that you have, but it will always be a lump sum payment or a monthly payment. Okay.
So that means that person can look forward to it to assist with their life going forward. And if in the event that the person died, the person, the beneficiary, the family left behind can actually look forward to that money coming in time to make burial or funeral arrangement. It's not going to take 6 months before they get that payout.
Once you're able to provide all the documentation that we require, what the company requires for them to pay out, they will pay out. They're not going to hold on to the capital. That's not the culture of our company. Okay,
and in that event, you reach out to your advisor, or do
you go directly to
Sagicor?
You can go directly to Sagicor because the relationship that you have is directly with the company. We are intermediaries, but it's good to call the agents. Or responsibility is actually to help you to fill out those documents if you need assistance and to help you to chaperone the process. Because when we sit with you and we have a discussion in terms of your need, we anticipate that possibly we might be in a position that we're going to end up paying out this policy if God blesses us with life. You understand? So that's just a part of what we do in terms of our careers. So that's reach out to the advisor. If your advisor is no longer in the business or whatever, for whatever reason, you can, and you know an advisor, reach out to the advisor. But anybody within Sagicor, we have a familial structure for the entire company. So if you have a claim to be done and even your neighbor work at Sagicor, I can guarantee that if you say to me, I have a policy, I don't know what to do, your neighbor will be able to assist. That's the type of culture that we have here at Sagicor. So it's just you just need to reach out. But that's why I keep saying maintain a strong relationship with the advisor, and you as a policy owner, you have beneficiaries. Once the beneficiaries are trustees, then in the event that your child is young, you can introduce them to the advisor. So in the event of a situation and the worst comes to worst, they know who to contact that will run to your aid with immediate effect to ensure that the family receives the benefit that you were sacrificing for over the years. So you can do that. Yeah.
All right. I know I said that was the last question, but I have another question for the last question.
Go ahead, man.
So something came to mind as you were talking, as it relates to beneficiary. What if at the time when I took out my policy, say for instance, no, and knock on wood, God forbid I die, I have my sister on, thank you, my sister as a beneficiary on my life insurance. And I don't have any children now, so there's nobody else. But what if she dies before me? Knock on wood again. She dies before me and I did not make that change. And on paper, I have nobody when I die. How do you see that working out? How would my benefits be handled?
So let me just repeat the question so everybody else is clear. You have the policy, your sister is the beneficiary.
No.
She passes now, but you didn't make the change.
I didn't make a change. And then I
pass off.
Yes.
Yeah, it will go to your estate.
Okay. And would that be a fight?
It does. No, you'll end up dying what you call intestacy. So the money goes downtown now, and it is no appropriate laws and stuff like that.
Okay. And if I have a will?
Not probate. If you have the will, the will will dictate. Now that's when the will will come in and dictate exactly what's supposed to happen with that money down there. So after after downtown takes care of who they need to give to, because remember now the thing about it is that once you die without a will, or even if you have a will, if that money goes downtown to be distributed, there are certain persons that have a call on the capital before anybody else can benefit, which are your creditors. The creditors are the first people that they're going to pay out. So you owe somebody money, they're going to have first call on this money. So that's a very good question you asked. The responsibility is now on everybody. If something happens to your beneficiary and you need to make a change, make the phone call. It's not difficult to do. It's one piece of paper you fill out and submit the necessary information, and it is changed. And the Sagicor is very swift on making the changes.
Okay, so it's not a hard process. Just call Sagicor, call your agent, and just ensure that
and get it done. So information on your policies should always be up to date. So what we do now to ensure that person have all the information, we have what we call client web. So most persons are being onboarded onto our online platform, so they can actually see the information on your policy in real time. So that's one thing that person needs to also.
I know client web, but for the likes of I never remember my password. The amount of time I call Sagicor to
reset the password.
Yes. Okay, I don't know why. I keep forgetting my client web.
Well, because it's that important to you. Well, the next time you change the password, put it somewhere in your email, and encrypt it based on what it is. So you might put it as the beneficiary name. So when you're searching for, just type in the beneficiary name and the password, and the username comes up.
Well, you see, because I guess because it's my way of thinking. Because I know I'm not going there to look and to pull any money or whatever. I just want to see that everything is fine and that the bank is sending over the money and whatever my premiums are being paid. So because I know it's been paid, I guess.
Yeah, there's no follow item.
Yes.
Well, as I say, one of the good things. So while you have the online access, that does not erode the relationship with you and the advisor. So every now and then, as I say, you can take up a phone and call the advisor to say, listen.
And I do that too.
What I go on, everything good? How my policy look, and then you can pull it up and I just goal and everything up to date. By the way, we need to have a proper sit down and see how I can assist you in terms of what your plans are, if there are any changes or whatnot.
Yes, I have your number. I'm going to be calling you.
Excellent. It's good.
Can't hide from me.
It's good to no, I don't plan to. But it's good to it's very good to prompt us, right? Because in our day-to-day activity, what we do is go out there to really try and help a lot of persons, right? And in helping a lot of persons, sometimes, right? Some of our core personnel, it's not that we neglect them, but you're on autopilot and you're running smooth for this year, so we might not check as much as we possibly need to do it throughout the year. But the onus is also on you for this call and make sure that your things are running smoothly, because that for some persons, and people need to keep it in mind, for some persons, that's the biggest investment that they have. That's the only thing that they have that they can pass down to their children.
Right.
So you have to make sure that things are properly done. You understand? So that's why I said Miss Wilson, I was happy to be a part of your program when I got the phone call.
Yes, and thank you so much for showing up, and I know you've been busy, guys. We're recording this on a Sunday, and would you believe that Mr. Clarke in meetings from morning Meetings from morning, even on a Sunday when he should be at home with his beautiful wife cooking Sunday dinner. Not having a glass of wine. He's here working.
I tell you, that's the nature of my career and the beauty about my career, and that's one of the things I love about my career. Because it doesn't feel like work. It doesn't feel like work. So I'm able to do 7 days a week. I have to balance myself, to be honest, because as I said, wife and stuff like that. So I have to balance and not OD. But I really love what I do. And I know I'm changing lives by just one conversation at a time.
Yeah.
The person are able to, and that is why, as financial advisors, especially with Sagicor, the culture that we've been brought under is to really go there and do our best to ensure that person understand these products and understand how these fit into them life and how it's going to help them. So we work 7 days a week, very late hours, just to make sure you guys are okay. So reach out to us. Sometimes you can check out too.
So Mr. Clarke, that means we need to bring back on just Sharika to talk about some financial planning and giving us some financial advice.
But of course, I'll be happy to.
Yes, I get the mention of emergency savings. Probably we could do something else on that so the persons can know how to put them financial life and get them emergency plan.
Emergency fund. So I'm just going to give you briefly and then we can close off and then have a discussion later. There are a few things that you need in your ideal portfolio, and when it comes down to the risk management and other things, life insurance is the first thing that we discuss. The life insurance, the critical illness insurance, the health insurance, the emergency funds, the budget, which is the budget and how you manage your cash flow. Then we're going to investment and talk about your short term, your medium term, your long term investments, and the long term investments now taking consideration what we call a pension.
Right.
And that's a topic on its own.
Yes. And I do have that topic on my to-do list, so maybe we can need to bring it back for that.
whenever you're ready, just give me a call and I'll be ready. I'll be willing.
So we're not giving them anymore. They're gonna have to wait on part 2, where Mr. Clarke will take us to financial wellness and how to get our finances in order. So we're going to end this interview right now. But before we do, is there any last word that you would want to say to the viewers, Mr. Clarke, before we wrap?
I just want to say the culture has been shifting. And based on when I started the business a few years ago to now, I've seen there's a shift in the culture in terms of persons being hungry for knowledge in terms of financial management. And because it's almost like it's an in thing now. So I want person to ride that wave, consuming as much information as you can possibly consume. However, ensure that you structure that information to fit your own personal lifestyle. So a plan for Sharika is not going to work for a plan for Shamar, and a plan for Shamar is not going to work for Sharika. So even though we have access to the same information, we have to ensure that we structure it as an individual thing. It has to be unique to you, right? So the discussion with an advisor that is trained is going to be important to that process. And the benefits of the entire discussion was predominantly about life insurance. So that's something I want person to just look at, say, have an in-depth conversation about your coverage. If you have it already, have the discussion to find out what you have, how it is benefiting you, how it can help you for what you wanted to do. If you don't have, how can it help you? And if you're just thinking about it, have the discussion, because it's going to help you and it forms a part of your overall portfolio. And I like to leave with just saying one little thing. It's something that I find now to be a little personal mantra. Nice. If you don't come from a rich family must come from you.
I like that one. I agree. I so agree. Yes. And one way you can ensure you have that is through life insurance. Because the reality is a lot of persons out there, the most money that they will ever leave is their life insurance money.
And that's fact. That's fact. That's not an opinion. It's a global fact.
So, all right. So I just want to say thank you, Mr. Clarke, for taking the time out of your busy schedule to share all of this information, all of these nuggets, all of this guidance with the viewers and all the persons who would be watching and pulling the information from this. I personally would have learned a lot from this session, and I know the viewers will learn something too. And I'm going to take up on the phone and call. Make sure you call Mr. Clarke start with the conversation, and then you can take it from there. All right. So I just want to say again, thank you, Mr. Clarke, for being here. And before we close, I want you to again leave your number, even though I'm going to be leaving it in the box down below. Tell us your number and how we may reach you.
So my contact number is 876-325-6944. Again, 876-325-6944. All
right, beautiful. So we're going to end this interview, this lovely interview, fulsome, lot of information. Good thing you can rewatch it as many times as you need. And as I said, contact Mr. Clarke and he will guide you accordingly. So until then, I will see you all in my next video. Thank you so much for watching. Remember to click the like button and to subscribe to the channel just in case you have not yet done so. Until then, guys, I will see you all in my next video. Bye. All right, so let me stop recording over the button there. Stop.